Many traders, especially the new ones to markets, somehow secretly aspire to set up complicated trading setups. Their dream setup looks like this: multiple charts, multiple screens, multiple indicators, moving averages, overlays of indicators, and probably a running news stream by the side. All of this resembling a scene out of the Matrix. This may give a trader an illusion of control, but does the complicated trading setup with multiple charts and overlays translate to a profitable trading strategy? Perhaps not. Hi, this is Karthik Rangappa, and in today's video, I'll talk to you about differentiating between noise and information when it comes to trading. The problem with a complicated setup, especially for a newbie trader, is that there are bound to be conflicting signals. For example, if a 5-minute chart on one of the screens suggests buying, at the same time the end-of-day chart on another screen may suggest selling. Or if an indicator such as RSI suggests buying, an indicator at the same time, maybe a Bollinger Band, may suggest selling. What are you going to do? Are you going to be a buyer or a seller? Well, this is where you need to start differentiating between noise and information. And to do this, you need to be super clear about what kind of trader you are in the market. If you are a swing trader, then your swing trading position is expected to run for a few days. You need to look at data points that make sense to you from a swing trading perspective. The data points that are relevant for you is information. Everything else is noise. Let me elaborate on this. Take a look at this chart of Mahindra and Mahindra. You can see that M&M has formed a bullish engulfing pattern. The prior trend is satisfactory. Perhaps the volumes are good too. Therefore, you decide to buy the stock and hold it for a few days, given that you are a swing trader. All the data points that led you to make this buy decision is based on the end-of-day chart. Therefore, the end-of-day chart for your trading style is considered information-bearing. Now, for whatever reason, let's assume that after initiating this buy trade, you switch from an end-of-day chart to a 5-minute chart. Clearly, a 5-minute chart throws out more data points to you compared to an end-of-day chart. This means that the number of data points that you have to deal with is a lot more now. That further means that the more number of data points that you have to deal with, the odds of you making a random decision is higher. This means, from your trading perspective, that is swing trading, you're now dealing with noise and not information. And when you trade basis noise, then the chance of making an irrational decision is higher. Irrational trading decisions often lead to losses in the market. Now, the other side is also true. For example, if you are a day trader, intraday charts make sense as the decision you make are based on information derived from the intraday chart. However, after initiating a trade, if you switch to a weekly chart to exit the trade, then perhaps your decision will not be backed by data-bearing information. So as a trader, you need to start differentiating between noise and information. What is noise to one trader can be information to another, and vice versa. The definition of noise and information is highly dependent on what kind of trader you are. So do spend some time trying to figure out what sort of a trader you are. Define your trading style based on your risk-taking capacity, and simply don't try to copy others. And after you define your trading style, it is also important to understand what time frame data you will start tracking. For example, if you aspire to be a positional trader, know what data set to deal with and what to disregard. Define your entry, exit, and profit booking criteria, and don't get swayed by external noise. Happy trading and investing.